Docusign, fall from grace. I tell you way back in September 2021, it's still growing but not as what the market wants, so it tanked. Docusign have a fantastic run since August 2019, around $44 to all the way to $314. But in November, it failed to test back the all-time high at 314. Signal something badly that's coming. The price gapped down so badly with over 40% fall in a single day. Docusign tanks amid the slowing demand growth in 3Q. So here it goes. You see that building growth actually declined from 52% to 43%. Revenue growth also dipped a bit in 3Q. You have to know this. Docusign previously, when it was over $300, it was trading over 25 times revenue. At the price of over $300, this valuation isn't cheap. It's definitely walking on a tightrope. See the evidence here in their earnings transcript. Markets definitely pay a lot for Docusign. It's in purple as compared to Adobe, which is in red. See, markets pay for Docusign so much at over 300% for the last 2 years, but naturally when it reacts badly, it really reacts badly. Even the billings guidance for 4Q this fiscal year isn't fantastic and is below market expectation. Is there really strength in customer demand driving growth? SQ really a case? You see the dollar retention level went as high as 125%, only to dip lower and lower to 121% in 3Q. With a lower billings growth guidance, 21 to 23% year-on-year growth, we ask ourselves, is there anything unique of the Docusign? They have e-signature, CLM, which is contract lifecycle management, notary, and insight analyzer. Anything unique here? You have to note that e-signature definitely represents a big portion of their revenue. A quick look at their balance sheet, you see, they have cash of around 500 over million. Isn't such a concern right now in terms of running out of cash, and for them to use the cash to grow their business is possible. One thing we have to take note is the convertible senior notes here, as well as for the longer term senior convertible notes here, which is quite a big portion, 780 million. Looking at their balance sheet and their projected growth, Docusign isn't that cheap. But of course, you also note that there's no immediate cash need of funding leaks. In their IR slide, they show that they are improving margin. The improving margin chart really look nice until you hear the earnings conference. Margin now is strong, but it's expected to come down as they continue to invest for the growth. This quarter 3Q, execution wasn't where CEO wants. Last year, when the COVID strikes, as well as the some spillover demand coming into this year, they actually benefit a lot. But now, they didn't shift fast enough to normal demand. What they have to do now, like what the CEO mentioned, is to drive customers' use cases so that they can generate more sales. This is just Adobe's year-on-year growth. What if billings and revenues for Docusign stabilize only at 20+% year-on-year? 5-day price performance of Docusign isn't that pretty. You see it tends from $247 all the way to around $131 at its lowest point, only to go up slightly to around $153. Which is down 38% on the 5 days period. This is just the return metrics using a current price of around $153. So what's your view on Docusign? For me, I wouldn't buy the dip, rather wait to see the next quarter results. I'm also worried about Docusign potentially trying to buy growth using M&A, because looking at their cash level in the balance sheet and their convertible senior notes level, I think if they ever want to do an M&A, they may have to do a fundraising to finance for the acquisition.
As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions.